Hi, everybody. I hope you're all doing well. My name is Bradley Triana. I'm the Senior Tax and Accounting Advisor here at MPK CPAs. And today we're going to be talking about one in a series of videos covering the One Big Beautiful Bill. And there's a lot of big changes coming to this bill. And a lot of people are kind of wondering what's happening. And a big one we've gotten questions about is the no tax on tips. And so we're going to be talking about the deduction and hopefully clarifying a lot of what has been said, what has been misstated, how things are going to be withheld on my paycheck, and how will I, navigate this as a business owner. So hopefully we can talk about all that. So one disclaimer, all information presented here is intended for the addressees only. So if you're a client, you are the intended audience, but any use of this information other than the addressees is strictly prohibited unless approved by NPK. All information provided here is for discussion purposes only. Actual situations may vary, and NPK makes every attempt to provide accurate and concise information in this presentation. However, some information may change over time depending on each client situation. We do not provide any legal services or legal advice to clients, and information and processes presented here are copyrighted by NPK. So let's jump in. So what is the no tax on tips deduction? How does it work? Do you qualify? And what do you need to know as a business owner? Hopefully we can cover all that today for you. Let's talk about the no tax on tips deduction. So the OBBA, the One Big Beautiful Bill Act, is effective for tax years 2025 through 2028. And it introduces a temporary deduction for qualified tips received by employees in occupations where tipping is customary. So we're talking about professions that are close to serving, or bartending, delivery drivers, and even beauty stylists. So that's kind of the realm that we're talking about here. So qualified tips, what are qualified tips? What does the IRS call qualified tips? Qualified tips are voluntary cash or charge tips received directly by customers or through tip sharing arrangements, and they are provided directly to the IRS. Now, here's the thing, mandatory service charges do not qualify. So that's one thing you'll want to look out for. The deduction is up to $25,000 per year, and there's a phase out for higher taxpayers. The deduction is available for both people who itemize and do not itemize and take the standard deduction. That's something important to remember, because usually these things only go for itemized. We have a situation where this is going to be a good adjustment for you. So what does this mean for me? What does this mean for you? What does this mean for you as a business owner? Maybe you're a sole proprietorship, you have a Schedule C. How does this affect the taxpayer? Well, if you're an individual, let's just say you work at a restaurant and you get tips, you don't have to worry about anything. You will still see your regular tax withholding. There's not going to be an adjustment to that because, again, this is going to be on the back end on the tax return. And so that's the only thing you need to be aware of. Some other professions that do qualify, though, we've already talked about servers, bartenders, hairstylists. There's a huge list that the administration has put out to what qualifies. It's an early list, but there's going to be a final one in October. There's other things like musicians, content creators, delivery drivers. Those all will qualify as well. However, there is a phase out. So if you are single, head of household, qualified surviving spouse, or married filing separately, the phase out starts at $150,000, and for every $1,000 over that amount, there is a $100 reduction of this deduction. So that's just something to look out for. For married filing jointly, it's $300,000. And this doesn't change any obligation for a business owner as well, and we'll get into that. So for business owners, you don't have to change anything. Your payroll processors should know how this is going to be properly handled. And like I mentioned, nothing's going to change. You're still going to have the same regular tax withholding. So there's going to be no change there. The big players like Gusto, ADP, Paychecks, they're all going to take care of that. Something that did change, though, is the FICA tip credit. If you're aware, this was only a credit available to people in the food industry. This has been extended to salons or beauty service businesses. So let's say you're self-employed, or you have a Schedule C, or just a sole proprietorship. How does this affect you? Can you still take this deduction? The answer is yes, but there are some caveats to that. So Sole proprietorships can take the deduction. We're talking about people who maybe you're a hairstylist and you have your own business. Maybe you work out of your house and you record everything that way. You must still report the full tip amount. But here's the thing. So if you take your expenses all the way down and you have a loss this year, you can't use this deduction to take it farther. So if you already shown a net loss on your business, this isn't going to increase that loss anymore. It's just if you have an income though, a net income, then you can use this deduction to take it down all the way to zero if that's how it comes out. So that is the one thing you'll have to be aware of if you are a delivery driver. Maybe you do DoorDash or Uber Eats or Shipt, or if you have a beauty-based business, that kind of thing. So again, our mission here, we empower our clients to make informed and confident financial decisions by equipping them to shape their financial future in a purposeful way. And that's our goal with these videos, and we want to make sure that comes across. So thank you for tuning in. I hope this was informational and you guys found it useful.